I'm pleased to bring in Hugh Hendry, former global macro hedge fund manager, founder of Eclectica Asset Management, a global macro hedge fund that was pretty much uncorrelated to everything in the financial universe. Hugh started Eclectica in 2002 and ran it for 15 years before closing in 2017. Hugh, it's great to have you on the show.
Oh, heavens. As I keep saying, joy is our energy. And I think at the end, with your joyful presence, we'll have created even more energy. So I'm very, very stoked and very happy to do this.
There you go. I'm here for it. And you are on St. Barts now. I know that's where you've been living lately. You've been a luxury hotelier. Tell me about the last 5 years. Like, what have you been up to, Hugh?
That is that we could go so many directions with that. I remember going on Bloomberg the day of kind of announcing the closure of the fund, and what a time that was back in October 2017, because I just opened this beautiful house, Maison Blanc Bleu, about 2 years prior to that. And, we got smacked head on with Hurricane Irma. The eye of the storm actually passed over the island. And I've never seen anything like it. And the house was actually closed for 9 months. Just not a huge need for repairs, but just the logistics of getting so much onto this tiny island. And in the same week as that darn storm in London, in my office, we lost the last remaining big client, and so the hedge fund had become untenable, and so that was closure. And so I was on Bloomberg and I was saying, I think I died in active financial combat, which of course is nonsense, but the brain is in this dark cavity in the head. There's no light, and it has to trust on on the crazy monkey chatter that occupies all of our time and attention. And I swear, periodically there were times, because you reflect kindly on the fact that my fund, it made money, it didn't make money, it made a lot of money, never lost a lot of money, returns, whatever, but it wasn't correlated. And in being that kind of different kind of thing, and being that cult, there were moments where you thought, oh my God, I'm so messed up. I'm dead. They're going to kill me. And your brain's like, oh, what? They're going to kill us. And you get flooded with all those terrible chemicals, because the brain doesn't know. So to answer your question, the last 5 years in St. Bart's have been healing, the soft focus of being in one of the most beautiful locations in the world, getting younger, if you will, getting even more irreverent, if you will. There's surfing here, and then there's this je ne sais quoi. This is a French island, and again, another great healing thing is learning a language, like lighting up neural pathways. Learning French, learning to play the bass guitar, and just kind of unwinding the mind. But here, there's something in St. Bart's. We like to say to borrow from, who was it? Bob Marley. What did he say? There's a natural mystic flowing through the air. And I don't know why, but somehow the darn rhythms of markets and currencies and treasuries and the Fed, somehow it gets into this head. So I hope I haven't taken too much time in answering your first question.
Not at all. It's interesting. And I like, Hugh, that you called it healing. And I'm looking at you now and you seem very relaxed. You have this beautiful, I could see the reflection in the windows behind you, just the beautiful views that you have. And you're obviously not in your suit and tie anymore, not as buttoned up as you used to be. But how do you kind of juxtapose your life now versus when you were running a hedge fund? And like, what kind of lessons do you look back and can pick out from your hedge fund career, and things that maybe you would even change?
Yeah, again, super question. So, if God forbid you were to do a Google search and bring up photographs of me, I don't look the same person. I've got this short hair and the tie and the suit. And back then, you got to sell, like finance is one of these things. It's a product that you got to sell it. And people have an expectation, preposterously silly expectations of how you're meant to look. And I had, my first year, we'd actually made a big chunk of money. We made 50% for the first calendar year because we had captured the initial upward thrust in gold, in the gold price. And then about 5 years later, in the toughest, most dramatic, most alarming month in 100 years of equity markets, October 2008, we recorded a gain of 50%. And 30 odd percent for the calendar year. But 6 months further forward, there was almost no money left in the fund. And it was kind of like, and I didn't wear a suit back then. I wore t-shirts and camouflage trousers. My office was not in Mayfair. You couldn't contact me by I didn't have an office-based telephone. The typical banking hedge fund relationship model is some guy or girl calls you with what they call the edge. Let me give you our flow. You're the first person I'm going to tell this to. So jump in, buy or sell before everyone else. And the only edge that I think I was looking for was the guitarist from U2. I certainly wasn't looking for, this peep list of kind of other people's narratives, so if there were distinctions, I was very much the architect of the very few achievements. And obviously I was the author of the lots and lots of mistakes, but I was good at handling mistakes. So, but owing to that, so there I was, and I thought I had performed, but because I didn't look the part, clients kind of weren't interested. And so I was persuaded to suit up and talk the talk. And I was promised that if I did that, I would soon be managing billions of dollars. And I'm dismayed to tell you it was true. And what did I learn? I learned that it was the best of times financially and creatively, and for my very, very sensitive soul, it was the worst of times. So that's what I learned.
What do you mean by that when you say the worst of times?
I wasn't happy. I'd lost myself. These kind of Three Musketeer, let's keep with the French theme, these Three Musketeer movies. And I think in one of these wonderful novels, I think there's been the real king of France has been born out of wedlock. I think there's been something naughty having passed between, the chambermaid and the father. I don't want to go there, but this poor kid, the man in the iron face is kept in the dungeons below, and no one talks about him. And of course, the more appropriate son is crowned. And I felt like that. I felt that the real me, the creative me, had been very much hidden, if you will, out of sight, because that person was, and yet that was the person that every now and again, because that person was like no other in this business, that person sometimes got glimpses of what could come to pass. That person was someone that could conceive of contentious posturing, of a narrative that today people would say, get out of here, you're crazy. But actually, in the fullness of time, I would measure with regard to 2 years. Within 2 years, it could become an accepted belief system. That's what I was good at. But that person was kind of muzzled and kept out of view. And, you know, I counted the money for a while. I popped the champagne corks and sent for. I don't like champagne, but, you know, I popped it anyway. Everyone around me was happy. And then one day I went, and I threw off the damn mask. And I wrote a letter to the clients. I think it was the end of 2013. And I said, hey, listen, what if I was parodying a character from Entourage, that wonderful, I think, HBO series, which was kind of roughly based on Mark, whatever he's called, the actor, and his exploits as he was starting off in Hollywood. And there was a director who was always making these fantastic claims. And apparently a long time ago, he'd been a big deal. And he was saying, what if I could tell you this movie is going to cost you $40 million to make, is going to gross you $400 million. You're going to win 3 Oscars. Is that something you would be interested in? And I parodied that to say, what if I was to tell you, I think this damn market is going to go higher and higher and higher, and you don't need me. And all around me, the team were hushed. They said, if you send that, business is over. And I looked at them all in the eye and I went, boom.
We hit
done.
send. Yeah. There are a couple of things in there that I want to explore with you, because I think this was one of the things that always made me interested in covering you. Is you were different, you were contrarian, and just kind of the way you think about things it's different, and I mean that in a really good way. You said
thank you.
Something about being able to conceive of contentious posturing of a narrative. I've heard you say this many times over the years. Can you explain what you mean by that?
I could try. I can certainly try. So there's a strange thing. I've been labeled as contrarian. And I always pause on that contrarian, but I pause because trends, being cognizant of trends, being consistent with trends has always been a fantastically important part of the exercise for me. For the first 8 years, it wasn't. For the first 8 years, I was immersed in a long-only pension fund business where the micro data and the analysis was incredibly thorough and good, and they sought to control risk through the investment in superior companies with the realistic expectation that superior companies are less risky, less subject to like dropping the ball. But God forbid if they do, because the implications are so. A trend following contrarian, you know, if you master in language, you might pull down oxymoron, and some people might just drop the oxy and just say more. It felt like in 2009 people were just saying he's a moron, you know. But you know, oxymoron is these two inconsistent terms clashing and being joined together. So forming a contentious narrative that could go on to become the accepted belief system. I pursued that, I want to say, calendar year 2006. I'm very proud of what I was saying. I was saying, if you believe the future is one of inflation, you have to buy duration. You got to be out there buying the long US Treasury bond today. And I was saying that as someone that came from having made a lot of money in gold. And I was saying, if you think gold's going to be $3,000, and you know, today it's, I don't know, like between $1,800 and $1,900. But back then, it would have been about $400 or $500. And we were beginning to see Wall Street banks. I remember Citigroup coming out and saying, gold's going to go to $3,000. Maybe. Not this year, i.e. 2006. And that's what I was saying. I was like, hey, listen, for their narrative to be fulfilled, what's got to happen is the Fed was at 5.25 overnight interest rates. And I was saying, I can see a storm. I mean, I can see a hell of a storm, an economic storm. And when this storm comes to pass, interest rates will be zero. And the central bank will be so pumped up because it'll feel like the end of the world that they will be taking so many risks with their reputation, and they will be experimenting with money, that's the environment that might propel gold and other inflation-linked securities higher. But first, you need this deflationary crisis. And so that, if you will, that came to pass, but that blew a lot of fuses in the minds of intelligent people. If you think the future is inflationary, by now, the asset class, which is the most exposed to inflation, like, you know, they would be damaged by inflation, which is 30-year bonds, where it's just a nominal security. But that nominality, if you will, is perfect when the deflationary storm comes to pass. So that's an example that came to pass.
I like that example. And it's just so interesting getting a glimpse into like how things kind of work for you. And I mean, it's interesting because I imagine in the hedge fund world, you know, it's like the idea dinners, the conferences, I don't know, whatever you hear on financial media. To me, what's so fascinating is just kind of this ability for you to kind of put together your thesis without all of that outside noise. Like, how do you do that? How do you kind of separate? What is kind of your process for kind of gathering the data or information to put together an argument or a thesis?
Yeah. So there was a process, I promise you. And the process began with surrounding myself with an intelligence crew, you know, really good CIA-like agents that had the nerve and the audacity and the willingness to take me on. That's very important. You know, great military leaders from history, when you read these books, their downfall is that with all of the acclaim, they find themselves surrounded by sycophants that don't contest, but simply amplify the reasoning of the person at the center. And you're always one step away from great mistakes when that's happening. And secondly, my intelligence team were distinct from me. You know, they were, never be a dick for a tick kind of thing. Like, surround yourself with people with profoundly greater talents than you in different silos, if you will, and pay them as much as possible. And just, again, create joy with that working environment. With regard to me, my thing was unique. So I'm going up 2 in 20, and if we go back 25 years ago, before the Zuckerbergs and before the technology platforms where winner takes everything, where you become worth $200 billion. Before that, the highest return on intellectual capital, it seemed, was managing a hedge fund. Still is. I mean, if you look at the preposterous returns created from the huge bounce out of markets from the COVID lows of March 2020, and you see the Chase Colemans and the like, and their $6 billion pay packets. Yeah. My point was, it makes no sense for me to try and outsmart the most logically intelligent people on the planet. And instead, I said about solving the equation. Why is it that even if you're super smart, you're not guaranteed to make money in the absurdity, in the theater, which is speculation? And so my information sources were different. again, I said to you, I'm in St. Bart's and I still have this kind of mystic sense of information reaching me. If you're a curious soul, if you've got an intelligent mind, it's coming at you everywhere. The challenge is to unlock the conscious or the unconscious REM. And so for me, reading, um, you people say I'm creative, right? Okay, well done, but you have to work at being creative. And reading is like this mental gym. And reading everything, going tangential, like do not read economic reports, God forbid, please do not. Read fun things, read literature. And the mind plays and expands, and the mind takes the decisions of the characters from the tales before they do, and then you judge what they're doing. You're harnessing the power of the mind. Um, so that's what I played a lot of music. I was either in my locked office with the lights off playing music loudly. I was at home doing the same. And I looked at um I'm not into today. I believe there's a conceit associated with modernity, with somehow that we are smarter than all of the generations that came before us. And I reject that. So I deployed uh, a charting sensibility created, I like to think, created by samurai waving, but certainly rice trading Japanese traders from the 17th century. Um, and that and the technology to go through a lot of charts which were prescribed on terms, they became like sheet music. And to listen to music and to read. From that, I could conceive of things. And then I was very willing to invest in anything like a centipede. I had 100 legs. I always believed in being um, dividing things into lots and lots and lots of things. And if it didn't work, I'd take it off. And then having that intelligence team, coming out of that room and saying, this is what I think. And my team would then go around banks and experts and would be very conventional and very thorough in their analysis. And then we'd have the synthesis where we might agree, we might not agree, and that would shape and form the portfolio.
There are so many gems in that answer that I could tease out further. Just like when you say like looking at charts is like sheet music, that just is so visual to me. Or the centipede with a bunch of different things and the ability to dividing things up, or if something's not working. How important is it, like the ability to change your mind? I don't know. I've been covering hedge funds for a decade. I would not say I'm not a hedge fund expert by any means, but sometimes it just kind of appears like maybe folks get in trouble when they can't change their mind. They can't be, flexible. Talk to me about, some of the things that like really work. Is it the ability to change your mind, not be married to a position? What do you think?
Yeah. So I can recall, um, I had 8 years of my career learning rudimentary and thorough technique in terms of trying to understand companies. I always liken it to reading the scriptures of the Taliban. You were being kind of immersed in an ideology, and it couldn't harness the kind of unique skill set that I have. Um, and then I met an extraordinary character, a pioneer in the hedge fund world, out of London, and he taught me these. If in Edinburgh, Edinburgh was grey and cold, and I know you might think of London as being grey and cold, but if you come from Scotland, London feels like Ibiza initially. Um, and he taught me to take on board softer, playfulness, curiosity and playfulness. To be, if you will, to be naughty, like not to be constrained, touch things. Oh, ouch, learn. And I think the superpower that we had was the ability to have investiture in today, to truly believe that you had it right, and yet to turn 180 degrees the next day and say, kick it out, kick it out. It's so hard. Some of the greats, Michael Steinhardt, as an example, but you know, the man, Stan Druckenmiller is legendary at this. He'll reach a point where he's in a funk and he doesn't get it, and picks up the phone and to the trading desk and he says, "Sell it all." It's so hard. Like the investiture that people have is so hard to do that because every day you feel like the clock's running, you know, the meter's running. And the great legends of the space, their superpower is close it all down because I don't get the market just now. So why should I be invested? So that's certainly, I would encourage, and I wish we could see more of that. You see this year, there's been a horrible slide in investment performance. You know, some of these notable, very well-paid managers have ended up losing, you know, 50, 60% in the first 6 months of the year. And that could have been overcome earlier just by saying, you know, I don't, what is the Fed doing? Do we have inflation? They want to raise interest rates. Did we read too much into COVID? You know, like Netflix seemed to give the wrong signal. You know, what is it called? A Peloton certainly gave the wrong signal. The home delivery companies gave the wrong signal. Like whatever was happening in 2020, 2021 was not going to happen as a perpetuity. And so valuations came unstuck. So like sitting on the bench for a while actually is a skill set that can preserve money.
I like that a lot. I also liked in your answer in the prior question when you talking about kind of being a bit more of like a curious soul, which I think you certainly are just based on what I've seen over the years. And I kind of want to see if we could go back to maybe some of your earlier years. You mentioned Scotland. You grew up in Glasgow. Is that correct? I'd just love to hear about, you know, what it was like growing up and how maybe your curiosity was kind of fostered over the years. What were you like as a young man?
Well, you know, John Lennon's got a great song called Working Class Hero. But I think it's just a great song, and it's not something that I really try and kind of proclaim, if you will. You know, my father was a truck driver. I'm very aware of the grayness of that life. But I'm also very clear that it gets very close to the therapy that I'm undertaking just now, because you know we are all defined. We all have a perception of reality by the things that, I mean, you're right to go looking there, because that's the launch pad that creates the personality of the adult many years later. And all I can say is, for reasons that I don't fully understand, I had to grow up very quickly. Like I had a lot of responsibility from the age of like 10 or so. And owing to that, I didn't really have a functioning childhood. My childhood was gray. My childhood was, I want to say it was sacrificed, owing to a deep and unexplainable desire to get out of Dodge, if you will. And I had an enlightenment that education would take me there. And it's funny how we package these memories. It was only, I want to say, I mean, it's getting way too personal, but I think only like 3 or 4 years ago, I kind of suddenly kind of thought, hey, maybe I'm kind of intelligent. All my life, I was in denial of all of these things. It's just this kind of, this fury, this, I don't know, this kind of, perhaps the anger of having missed a childhood. And so very much, so what you see now is the Benjamin Button. And you know, one of the reasons when I got here to this beautiful place with with all the things, you know, the hiking, the swimming, you know, I was swimming in the ocean this morning. The child within me said, okay, we're not going anywhere now. We're staying here and we're going to be childlike, you know, and I do lots of kind of silly goofy things like a child would. So I'm kind of, if you will, spending my life in reverse.
I like that, and I also like how open you've been and open you're being about this as well. Because I just think more people need to hear this from folks, especially someone who's been in this industry for I guess more than 15 years. What was it that made you want to go into markets? Like how did that kind of, you mentioned earlier it was like, the best return on your like intellectual capital at the time when you were getting into it. But what was it about markets that kind of drew you into that business?
Well, I was not some 10-year-old entrepreneur, you know. When I was regaling you with the notion of growing up too rapidly, I think it was like organizing my parents in my life if it was defined somewhat by the political economic revolution of Reagan and Thatcher, especially Thatcher. She introduced the ability for ordinary folk to buy public housing stock. We were renting an apartment and then a home from the local government. And then Thatcher came around and said, I want you to buy it. I think if you own it, then there'll be a greater sense of community and you'll take care of things. And it's something I kind of I applaud and support. But what it meant was that and here we are 50 years later. So this was 1980. Is that 50 years? Sorry,
40, is it almost
less than
gosh, it's
43 years, 42 years.
Yeah, something like that. Yeah.
I'm just adding decades onto my age. But it 40 odd years ago, there were some folk who just never conceived that they would have a mortgage. Get out of here. And I kind of sent my parents into like hyperdrive of being anxious. And it meant that my mother got a job, and it meant that my father took on these long distance gigs. And I knew that's all the kind of psychosis inside my head. So like when I was saying I was growing up, I was like, making beds, peeling potatoes and silly stuff like that. I was not on golf courses trying to like fish out golf balls and then selling them back to the customers. I didn't have a paper round and then I was investing it, in privatization issues coming out of the Thatcher government. None of that. My thing is more like when people describe, when artists describe hearing Bowie for the first time, hearing the Doors, coming out of the radio, driving on the freeway, and life suddenly changed. And for me, that moment was I took on a subject. It certainly doesn't sound like the Doors or David Bowie, but I was studying market-based accounting research. Oh la vache. And we had a precursor of Bloomberg terminals. We had DataStream, this old kind of box with a kind of green screen. And we were testing accountancy hypothesis, a change of accountancy policy, one where it doesn't change the underlying cash flow of the business and therefore it's just noise, and one where actually it does have implications for cash flow and therefore valuation. And would the market be able to determine the difference? And so I was there with this screen. I'd set it all up, under instruction, and you're literally waiting for the tempest. It was so dramatic. It's like being a free diver, being at the bottom of the ocean and almost giving away your lung capacity to regain the surface with the expectation that a mermaid might reach out in the gloom and offer you another world. This is my romanticism, forgive me. And that was my hook. I thought, wow, I like this. And then I discovered that there was, so that was in Glasgow, and 50 miles away, Edinburgh was really quite a prominent financial center. And serendipity lent a hand, and with the passion that I've always had, I found myself, 9 months later, embarking on, this fascinating journey. I'd never heard of hedge funds. And again, it was just a further ridiculous turns of fate that led me to have a lunch with the chap who'd been either the first, second, or third person in Europe to launch to launch a hedge fund under the auspices of George Soros. So some people say life's just meant to be. I don't know. I get confused by it.
And that was the gentleman that you mentioned earlier. That was the man who kind of helped you kind of have more fun, explore your curiosity when it came to investing. Is that correct?
Yeah. So that's Chris Benodi.
Oh, of course.
And,
yes.
yeah. Larger than life. And we worked together from March 1999 to March 2002. 2002, is that right? No, 2005, longer than that, 2005, yeah. And yeah, I mean, I cherish the memories of the man and that, you know, when he was thinking about hiring me, you know, there's a process of due diligence, which I call being nosy. And you know, he would call around, and the message was toxic. You know, kid's a troublemaker. But Crispin understood that military thing, and he needed troublemakers that would take him on. They would say, "Nah, not this time. I disagree."
You need a little bit of troublemaking. I think that's a good thing.
Yeah.
Yeah.
If we all agree, then we're busted.
Yeah.
Perhaps just now the problem is we can't agree. Like, you know, we might discuss that in the fullness of time. But you know, I wrote a paper in June 2020 saying, you know, the dawn of chaos, and chaos is when, you know, we become too tribal. You know, like in America, first and foremost, you're American, you know, and that's kind of getting lost. And for good reason, it's getting lost because it's getting lost owing to a very difficult set of economic circumstances, which really haven't been resolved now in perhaps 15 years. People are getting angry, but you know.
Let's start to explore that. You mentioned this white paper you put out in 2020, The Dawn of Chaos, and you know, you mentioned people getting angry about kind of the economic circumstances. What do you make of the economy? What is kind of your overall view right now?
I'm fearful of the economy, and I'm again I become fearful of the economy when the Fed becomes prominent in the debate. And why is that? Because the Fed is always wrong. I'm not gloating. I don't really perceive or understand the Fed's role. Money is complicated. I want to tell you that, you know, these hedge fund guys that get, or girls who get paid billions of dollars, they don't understand money. It's not the ignorance is not the preserve of the Federal Reserve. You find it the length and breadth of Wall Street. I mean, I've been studying this for 30 odd years. With one hand, 5 fingers, one hand, I could barely count the people who actually understand money. So thankfully some do, but you don't find them at the Federal Reserve. Fed's like like an uncle at a wedding, like doing some kind of chicken dancing. It's like there's just no need for the Fed. So, and then the thing that fascinates me is again that cultural engagement and language. I think we were touching upon language narrative. And something quite extraordinary has come to pass in the last month, whereby we had the official reporting on second quarter GDP data, and it revealed that we've now endured in North America 2 consecutive quarters where the economy contracted. And for as long as I've been invested in markets, you call that a recession. I kind of grumble a bit when, the financial media, the 20% rule, when the stock market falls 20%, boom, is in a bear
Bear
market.
market, yeah.
Fine, but okay. But for sure, 2 consecutive quarters of negative of growth is a recession. And it was extraordinary to see the Fed, to see their acolytes, to see the financial media come out with the most preposterous rejection of that reality.
And the White House too. The White House blog post, yeah.
They're all in the short-term business of winning votes and surviving to the the midterms and then surviving to the primaries, and it's all crooked. So that's why I'm fearful. I'm fearful because the Fed chairman seems to have a hero complex. He seems to make a lot of money on Wall Street. Seems to be able to kind of cash it in on this kind of, when you become a public servant, you kind of get your portfolio and you get to rinse it of all capital gains. I mean, that's not particular to him, that's particular to them all. All these Goldman Sachs chief executives that suddenly you run the treasury. I mean, it's the greatest capital gains rinse elimination technique. And plus, you get great tales to tell the kids and the grandkids. But Jay keeps talking about Paul Volcker. And Paul Volcker, of course, is this legendary figure from 1979, who became Fed chairman, a Texan with swagger and a very tall, physically imposing person, that in the midst of at that time, the greatest economic recession since the end of the Second World War, he was raising interest rates very, very aggressively in a desire to squeeze the system of inflation. And Jay Powell he mentions that reference point way too many times for my comfort level. And I say that because context is everything, especially in the reputational business. And so back with Volcker, so I said to you 79, and from 79 I'd go, my next logical point would be 1929. So that's 50 years. And in 29, we kind of went over the edge. The Federal Reserve made another error, which is what they do. They're in the error business. And equities reset to zero, effectively. And the banking sector reset to zero, which is to say the North American banking sector, the global banking sector went bankrupt. And that obviously impacted society, and society therefore said no more of this, and we insist that we have no heroics and no excessive risk taking from banks. And over the course of the next 40 years, banks became kind of dull, conservative, utility-like functions, and we took debt out of the business of the economy. We deleveraged the economy, so all of the debt from the government to whatever's on your credit card to whatever your company is borrowing, all of that back in the early 1930s. It went to 3, possibly 4 times, because a lot of it was reneged. You said, you thought it was an asset, and you said, I'm not paying. And so like 3-4 times GDP, debt to GDP. And when Volcker came in, debt was 1 time. So we deleveraged. There was really very little debt. And here we are again, 40 years later, and debt's back at the warning levels of 4 going on 5 times. Now, that's not the environment to summon the spirit of Jay Volcker. There you go. I'm kind of giving him the mix. That's definitely an oxymoron, Jay Volcker. No, that's just moronic, actually. Not oxymoronic. It's not the time to be Volcker-like and push rates. So what they've done with interest rates, I think, was inappropriate, because I believe the private sector, there's great genius that resides within these deep, deep markets that price rates every single day. And all of this year, they've been warning the Fed, you're making a mistake. So that's my concern about today.
So Fed is making a mistake. Pointed to debt at warning levels, and the way they've been moving rates has been inappropriate. Help folks understand maybe even like the ordinary folks too, how you think this ultimately plays out. What are the consequences of the Fed's policies?
Okay, so it is playing out, and it's not playing out very well. So the hardest thing for the ordinary folk and for the financial folk together is to recognize that the Federal Reserve Board of the United States, as lofty and as incredible as it sounds, does not print money. Yeah, I mean, the 1934-35 Federal Reserve Act prohibits, you go to jail if the Fed printed money. And again, one of the profound absurdities in the midst of the great fear of COVID, Jay Powell was on daytime television. He was saying, "Yeah, we print money. We print money." He was trying to make people feel better. Don't we got your back. We'll print money. We'll get you out of this situation. Wow. No, he was lying. He was lying. Liar, liar, pants on fire. Really extraordinary. No one, called him out because there's only 5 people in the world that actually know he was lying. Private sector banks create money. How do they create money? They give you a loan, right? You got to, like, I'm in a work site just now. I've borrowed way too much money, I think, collectively to buy the thing and then to renovate. I borrowed 9 million euros. Right. That 9 million euros before it was transferred to my account didn't exist. That's printing money. Now, because the banks almost went bankrupt, if we go back to the end of 2008, their appetite to go bankrupt again really is very, very low. So that, yes, the banks have been kind of lending, but they'll lend everything to Apple or Johnson & Johnson. But if you go to them as a mom and pop enterprise or whatever, and it's a little bit kind of funky and a little bit risky, they're not interested. Like, let me give you an example. Credit card. There's a lot talking about credit cards just now. Credit cards are booming. Are they? Credit card outstanding balances are 9% below where they were in 2019. Money's just not out there. So what's happened since 2008 is that periodically, every 2 or 3 years, the Fed has panicked because it doesn't know that we, starting in the 1960s, we have this very heavens dark web. It's like the Matrix, but private sector banks from around the world all came together and they created a network of alliances and trust, which we call the euro-dollar monetary system. There's a system whereby private sector banks outside America could create greenbacks. And this was a system where you took the Fed out of money. And ever since, the Fed's been hopelessly out of it's been blind. And so with that blindness, it can't see. And every 3 years since 2008, they've tried to raise interest rates. And owing to that, I think this is the 5th cycle of being wrong since the great financial crisis. But owing to that, whilst the economy has recovered, it has never recovered the growth rate of the 30 years to 2007. If you went back 87, 97, 2007, we were kind of growing at, the US economy is growing in real terms at 3 percentage points per annum. Since then, it's been at best 1.7%. We've lost a percentage point of annual growth that over 15 years amounts to trillions of dollars of lost income every single year. And that's a depression. So I said to you, they're denying the existence of a recession despite the textbook, clarification. And in the media, no one writes about a depression. Depressions have been consigned to the 1930s. They couldn't possibly happen now because, again, it's the conceit of modernity that we're smarter are we? We're in the midst of a gentle, but nevertheless a miserable economic depression. And I put a lot of the blame to the Federal Reserves.
I have even more questions. And I mean, this is I'm so thankful to get to talk to you, because these are ideas that you're right, you're not hearing in the mainstream media. Let's explore this notion that what I'm hearing from you is that we're currently in a depression. It might not be as miserable as the one from the 30s, but let's explore this. How do we get out of this depression? How does it end?
You get out of it. I keep saying you got to go to my Substack and you got to get one of these hats that says, "I recommend you panic."
Oh,
And this literally, this is the most subversive thing that you can do. And forgive me, because I sell them for $100. I
noticed.
I never knowingly undersell. And everyone was like, "You sell it for $100." These hats are primed for subversity. They change your mood, see things, and try and tap into some of the creativity that, I'm out there all the time. I've got so much invested in trying to take on these gray men of finance. So help me buy a hat. But yeah, so you go to the experts are invested in the here and the now. In the here and the now, prices will recover. Stock market prices will go higher and higher and higher. And Chase Coleman III maybe makes a big gain again, and maybe in 10 years' time, he has another gain of $5 billion. And all of the experts who live in that microculture, who wear expensive suits, who live in a neighborhood which is not your neighborhood, who fly business everywhere, right? They're like, no, it's going to be okay. And I was on the British broadcasting, the BBC, during the midst of the European sovereign crisis regarding Italy and Greece and all of those unfortunate countries. And I was asked, what should the ordinary person do? I was like, panic.
I remember that interview.
Today. Yeah. And it's the same thing today. It's really hard to find the resource to put $60 of gas in the tank. And people say, what should the ordinary people do? They should panic. They should be damn angry. I'm in St. Barts. I build these houses and I rent them out. Look at me, it's blinking hot, okay? Not only is it hot, it's humid. You're not too far away. I'm sure your conditions are similar, but I'm way south. And my clients, they can put $60 of gas in the tank, and they come to me and like, can you ramp up? Can you put the heating on in the swimming pool? I'm like, it's summer, really? I've got heat mirages coming off of the pool. Can you turn the AC set at 17? Can you get it to go lower? They're never. So there's two worlds. There's the world of the enfranchised who've owned assets since the Fed started to kind of, the Fed, okay, let's give them a break. In 2009, they had a binary choice: repeat the era of the 1930s and let the banking system go bankrupt, or step in and try and influence through their language and other means and support asset prices. And it's not, the Fed is not Hercules, that whole thing where you're holding the globe on your shoulders. That's not the Fed. That's every single US citizen. It's not the Fed, it's every single US citizen. And so the kind of residing anger and the problem in the political economy today is that back in 2009, and with every periodic interruption to higher asset prices, in 2019, share prices fell 20%, and then the Fed did something. In March 2020, the equity prices were falling rapidly, and the Fed concocted language in a support operation. But when it does that, it is calling upon every US citizen. So what am I trying to say there? I'm saying that within the citizenship of the US. There are those who own assets, and there are those perhaps owing to their age, where they are in their income cycle in terms of being able to put aside savings. And again, I keep using this word serendipity, but some people just didn't get there with life and don't have assets. But they are called upon to bail out the people with assets. So we reach a point where you can be in St. Barts and complaining that the swimming pool should be a warmer temperature at the same time as the people who kind of made sure that you completed that journey are struggling to buy the school uniform for the return to school, who are struggling, who are having to trade down on food, and who are struggling to get to work. And that's where we are in the crossfires just now, where that's why we have Trump and why we have Brexit, because there's just too many people who find themselves on the wrong side of that equation.
There's, again, more to unpack within that. And I just want to continue to just explore this notion of us being in a depression, these kind of two worlds that you mentioned. Are you hearing, when you bring this thesis up to other folks, especially maybe folks maybe in the investing world too, do they agree with you? Do they say, yeah, that's right, that's what's, because it's I don't know, it's not one that you're right, it's not one that you're going to hear in the traditional financial media, but when you unpack it that way, it makes a lot of sense.
Yeah, so I again, friends who are in finance, what's their incentive to shake things up? They like the status quo. Can we keep it? It's kind of cool, you know. The whole hedge fund thing, especially. What did we see? It's just the cycle of COVID. We saw businesses which, owing to the exceptional circumstances, their profits boomed. And then you had private equity sponsors who were sufficiently smart to recognize that probably the business didn't get any better than it looked back then at the end of 2020. And so they spent all of 2021 offloading their ownership onto the uninformed, the unwashed, if you will. Hey, buy this pizza delivery company, buy this, stationary bike company, buy Netflix, buy all of these, these television platform companies without adverts. And so again, then a year later, you see that all the funds that bought that garbage, they then all lose 60%. We need a revolution, because how on earth can a manager personally make $6 billion and then within 18 months have lost all of it, and yet they don't have to pay a cent back? We live in a world with my financial friends. It's like, heads I win, tails I win, you. And it's like, remind me who you are again. I mean, that's where we are. So that sounds facetious, but and it is, but it's that's not far from the truth.
Yeah.
And then we haven't spoken yet about the class, this corrosive class warfare, which is now coinciding with this bumbling and erroneous Federal Reserve. And again, if we're not careful, it's just going to be the torchlight that blows up our system. I'm concerned about the world.
Yeah. Okay. More things to just follow on here. You said we need a revolution. What does a revolution look like?
Okay, so the revolution is getting political representation. And that's hard because there's not much in the way of, there's not many, how should I put this delicately? We live at a point in time where if you go seeking advice and knowledge, a reasonable, rational political operator would know where to find it. It's in the center. The names are obvious. They feature in financial media publications. They can be of Egyptian origin, etc. They speak nonsense. We're at one of those. Change in society, thankfully, comes so very rarely because it can be so disruptive. And it can be at a pace of 50, 60 years, which, if you think about it again, was almost the previous lifespan of individuals, certainly the lifespan of accumulating wealth. And so it kind of rhymes. But to understand the world at these forks, you have to be cognizant of kind of some of the crazier people, like people who like wear hats with their name on it, because sometimes it's the darn crazy people that can tell you that the system is even crazier than they are, and they can actually help you get a sense of things. So let me have a go at that. It's China. So central banks have been applauded, and it for their role in reducing inflation over the last 40 years. And again, the benchmark is meant to be Paul Volcker. I think that's an unearned reputation. I think that the decline in inflation owes everything to the willingness to accept the entry of China and its 1.4 billion citizens into the global trading system. And that willingness understood that poor, unskilled folk in communities in what we call the West would suffer. They would suffer the indignity of losing their job. They would eventually find themselves in a packaging and sorting office for Amazon. I've got nothing against Amazon, but I can't believe a day in a factory like that leaves your soul fulfilled. And yet that's kind of one of the better jobs today in a world where the 1.4 billion people kind of keep winning. Now, that was all right because we had what are you going to do? You've got a billion plus people and they earn $1 a day. And because of that, they're always subject to kind of revolution and, they all want to be communists and burn the system down. And so there was an enlightenment. Hey, what if we made them richer? Maybe they'd be a bit like us and they'd be less prone to the whole communism thing. And more than that, as rich people, they would trade freely with us. And then they're actually 2 + 2 might actually equal 6 for us, not 2.5. And that's where there's been a failure for the Chinese to come through. And they use the value of their exchange rate vis-a-vis the dollar, and they manage it. They don't permit folk like me to push it where it should be. It should be a lot stronger. If the renminbi were so today it's about 6.75. If it were trading at 4.5, it'd be a lot stronger. You would need less local currency to buy dollars or to buy products made in the United States. And so those 1.4 billion people could spend a lot more. They'd be wealthier. But the autocrats that run their system are just not willing to give them that freedom. And so they impose a kind of, it's not even culture, they impose a system which creates huge surplus savings. And with that money, they park it in United States treasuries. It's the only market in the world where they're welcome. It's the only market in the world which is deep. It's the only market in the world where if they need the money back quickly, which they did again in March of 2020, and the Federal Reserve said, yeah, fine, we'll write a check, you take it. Okay. That system is leading to serfdom in the United States of America. And that system has to stop. And the ability to stop it is simple. We would impose a withholding tax. So every year, so these nations own about $7.5 trillion. And it's designed for that purpose, to create serfdom in America, and charge them something, anything. I would charge them 3 percentage points a year. I swear to you, they will pay it. They will pay it. And with that money, let's create a sovereign wealth fund. And when the Federal Reserve, when it's finished with its economic vandalism, when the S&P's dropped another 20% from these levels, and when they're coming back in and trying to rescue asset prices, let's rescue it with the sovereign wealth fund, and then give an allocation. The ownership of that fund would be to the citizens of the United States who are disenfranchised. So suddenly, it wouldn't be two tribes: those who have assets and can come to St. Bart's, and those who just pay the bills. It would be, everyone would be enfranchised. And let's have that debate, but it doesn't exist.
Why do you think people aren't? I mean, that's an interesting idea. Why isn't this something that's being more widely discussed?
Because it's complicated, and because that system, you know, the fabled 1%, and you know that fabled 1% have a strong proximity to Wall Street, or they're purveyors of jewelry and real estate and automobiles. But you know, that system boosts profitability. It boosts corporate profits. If I was to present to you a chart of the share of corporate profits divided by all of the income in the economy. So what does that mean? If you're working in the Amazon sorting factory, that's your salary. If we add everyone's salary up, from making tractors to being accountants and dentists, if we were to add on the profits of Exxon and Microsoft, etc., if we were to throw in the rents that landlords receive, and if we were to throw in the interest income that creditors receive, out of all of that mix, you see that corporate profitabilities have just been taking more and more and more of the pie. And that is the mechanism which excites the stock market. And so it pushes asset prices higher, and it makes this tiny coterie of people even richer every single year. You give them a body snatching invasion called COVID, and you think we got you now. No, you don't. They get richer. Unstoppable force. Turkeys don't vote for Christmas. That 1% who, of course, spend billions placating the politicians in Washington, blinding them that we have prosperity. You've got prosperity for them, but not for everyone else. But that, the mighty dollar buys a lot of precious political opinion.
Again, I want to tease out even more. Can we go back to the Fed? You mentioned like economic vandalism from the Fed, a lot of the mistakes they've made. Is there something they could have done, or maybe something they should do? Can they kind of turn this around or stop making mistakes in your view? What can they do?
They could resign. We have, so how many, I should know this and I don't know. I'm lazy. Hey, I'm, building a beautiful house. I don't know how many board members there are for the Federal Reserve. When they come together and they have that interest rate setting meeting. But let's say it's 15 people. I prefer the private markets where you've got thousands upon thousands upon thousands of people making those decisions every single day. And what's more, their decisions are highly tuned decisions because they are having to use their judgment and anticipate where we're going. And if their judgment is out, they will lose money. Potentially, they will lose a lot of money. They could lose their career. So I like judgment where there's a sharp pencil against your spine. And if you get complacent or if you're wrong, oh, you feel it. The Federal Reserve is like one of my other great kind of people I'm a little bit against. Not against, but I'm against the power and the access to the media that they get. And these people are tenured economic professors. And they can, and they do, spout nonsense. And no one takes them on because they've been given a Nobel Prize or because they work at such a prestigious university. And they can consistently be wrong, but they never lose their tenure. Get rid of them. So every single day we get a price for interest rates determined by the market. And the price of those interest rates is again, to repeat ad nauseum, is wildly different from where the Federal Reserve and these 15 or 18 wise people who meet on a very regular, but not every day, and where the penalty of being wrong is, well, we've got to try harder. So, the Federal Reserve. So let me give you a very good example. Jay raised rates. Janet had been raising rates, but like Janet's cautious. And then Jay came in and he's like, I want to be Volcker. Boom, 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 hits rates. In 2018. And we were in the midst of a big credit markets were financing hydrocarbon exploration, the fracking, the wonderful resource, the huge fracking fields of North America. It's a precarious business, and it was being financed by high yield credit. And then Jay kind of somehow blindly, he sees that this economy, which is in depression, needs to be slowed down. He raises rates. My friends in my markets go, you're crazy. Okay, now we've got to reflect where you're going to take things. But I tell you, this is going to break. Sure enough, the system breaks. And so the high yield bonds supporting all of this energy exploration, they go from trading 96 cents in the dollar to 26 cents in the dollar. There's a financial panic, and you sell this stuff. And so here we are today, and we haven't even mentioned inflation. I reject the ubiquitous terminology of inflation. I believe we're seeing profoundly high prices in a subsector of the economy where we have no choice. We can't cut back on our consumption. We have to buy them at all cost. And then I see discretionary expenditure, again, like those silly Peloton bikes, which you don't need, or the subscription, your Netflix, which you don't need, eating out in restaurants, which you can eat less out time, etc. But anyway, quite recently, you've been paying $175. The price of oil per barrel just now is like $90, but filling the car up with gas at the forecourt, you've been paying $175. Why? I would say to you two reasons. The Federal Reserve, that Jay's hiking cycle, which was unnecessary, he admitted it, he had to pull away from it in 2018, but he destroyed the high yield credit financing environment for the oil and gas fracking operators. And so today we're looking for the US to increase supply to bring down these energy prices. And these guys are like, it's Occam's razor or whatever. Is it Occam's razor? No, it's the Pavlov's dog. Pavlov's dog. They're like, my creditors, my investors are like, no. You pay down your debt. Do not go fracking. Pay down your debt. That's one of the reasons we've got you're paying $175 at the forecourt for gas. Blame Jay.
Wait, is that in St. Barts? 175 or?
That's in Texas.
What? Okay, I'm paying like maybe 72 to $80, but for diesel. But
for diesel, well, you've worked it all the way through, because you see what happens is barrel of oil is $90, okay, but that's not the end of the story. You got to refine. You get different grades and types of petroleum. The stuff out of Russia's heavy and needs a much different form of refining. Um, and then we hit the other monster of insanity. The society's rightful desire to stop the warming of the world. To save this fragile planet, but we're going about it all wrong. This environmental social governance has meant that we've again just been, let's take the example of Germany, where they're paying $600 per barrel to heat houses today, right? And where you have the Green Party, and because of the profound incompetence of public servants, the Green Party are now burning sulfuric coal. Coal is at the highest price ever because the Greens are burning it. You can't, my touchstone. Let me just stop a second. Albert Camus, existentialist Belgian French philosopher. Life is impossibly light because, and forgive me if you're of a religious distinction, I say this with frivolity, but God is dead. There are no rules. You're on your own. Life is absurd. Okay. The absurdity of having a green governing party burning coal and $600. So back to what you're paying for gas in Miami and elsewhere. There has been no new refining plant built west of the Suez in 45 years.
Wow.
I mean, today feels like I may start as subconsciously calling you Dagny from Atlas Shrugged. Dagny, something's not right about the world. Something just, I don't know what it is, but something really feels dark and broken about this world.
There's a lot. Again, I do want to talk about ESG, and gosh, I've been reading a lot about like oil lately, and you mentioned a couple of different types of it. And yeah, there's some that's heavier, some that's lighter, sweeter. And the refining facilities, it depends on what they usually refine too. So there's a lot to dig into there. But before we get into ESG, can we go back to inflation for a sec? Because and sorry to jump all over the place, but there's just something I've been like really keen to ask you about is you've said inflation is a social phenomenon. I would love to hear you unpack that.
Yeah. So people have been warning about inflation. Really smart people have been warning about inflation since March 2009 with the advent of quantitative easing on American financial soil. Obviously, the Japanese had started that experiment, I think 9 years prior to the Federal Reserve. And back in the day, there was huge column inches given to the US dollar is going to go the way of the Zimbabwean dollar. And that is to, again, believe that there's an investiture with the Federal Reserve, that the 5 people who actually understand money work for the Federal Reserve. Sadly, they don't. And so you get this profound misunderstanding about what quantitative easing is. Quantitative easing is the creation of, at this point, about what, $9 trillion of tokens, not of money. Like, so it's reserve assets, banking reserve assets. And you've got to make that distinction. Like, you could take $9 trillion of bank reserve assets to Starbucks and try and buy a Frappuccino, and you will fail. They will not accept your $9 trillion of reserve banking assets in lieu of a Frappuccino. Okay, so something's wrong. And that's a silly example, but since March 2009, so were the sloganeering to be true, if you had created an enormous surplus, $9 trillion of surplus greenbacks, then the marginal price of each greenback would be on the slide. And again, that's not true. The external value of the dollar has appreciated against just about every currency, but perhaps not against the Chinese, because their trade flows, they're running huge trade surpluses. And again, they're running huge trade surpluses because they're a little bit kind of malevolent in how they underwrite the external value of their currency. So a strange business. And then where the Fed, I told you, like Jay being on daytime TV and saying, yeah, we're printing money. It's us, we're doing it. All right. And then you fast forward 2 years and suddenly, prices in the continent of North America are running at almost 10% year over year. And it's reminiscent of the 1940s. And Jay owns it now, because he stupidly told everyone he was printing money when he wasn't, and the administration, the leadership of the US, they heard it, and they're like, hey, Jay, come here a second. So you were printing money, and now we've got prices out of control, and my poll, that my opinion polls are collapsing. It's on you, my friend. Sort it out. And so Jay's in this kind of, oh my God, I was a little bit silly. And so now that's partly why I think they're being so aggressive in trying to increase interest rates and sound like Paul Volcker. Now, in terms of the inflation that we worry about, well, the closest proximity, of course, is the 1970s. The 1970s was an extraordinary decade, a decade like no other from the past in terms of the United States experience, and no other that we've seen. And I mentioned to you this matrix, the red pills, the blue pills, that I mentioned to you in the 1960s. The world's private banking system had finally latched onto a system where they could take the government or the feds out of the money creating process. And so previously the Fed would give you rules about how much you could lend to each other. And then we went on to this dark system whereby if your counterparty, which was another bank, if they had full confidence in your ability to deliver your commitments, you could do whatever you wanted. And so that was an amazing period where banks became drunk with the possibility. And what do private sector banks do? They print money. They lend, they print money. They lend, they print money. And they did that ad nauseum. And they created the monetary wherewithal. So where am I going with this? I'm going with this sense that if money does not expand, well, let's say it expands by 2%, but over the last year, it's costing you like 50% more to fill up your car and to heat the house and to cool the house. And your food bill's gone up 20% and everything else, right? So your basket of goods and services that you normally consume has gone up on average by 10 or 12%. But the amount of money circulating in the economy has risen by 2, 3, 4%. Okay. Then one doesn't fit into the other. There's not enough money for you to continue to support the same level of consumption as you did a year ago. And that forces choice upon you. You don't really have choice, because you don't have choice. You've got to drive to the office or the factory. You got to heat your house. You got to feed the kids, etc. And so it's pretty obvious where you cut back. And that's why the Fed keeps saying, I mean, do they say it? But that's effectively what they're saying. We're going to create a recession. We want you to lose your job so that you won't have the wherewithal to maintain the same consumption as you did a year ago or 2 years ago. They want you to lose your job. It's at the same time as the damn mercantilist nations in Germany and the Central Asia, they want you to lose your job so that they can take it. And that is a profound nasty class warfare, again, which creates the seeds of the reincarnation of God knows another form of Trump anger. But it doesn't create inflation because those ecstatic banks from the 1970s, I mean, they're on Valium today. I mean, they're on opioids because they're so depressed, because unrestricted in their ability to lend money, which they were in the years 2003, 2004, 2005, 2006, 2007. You want a loan? Hey, I just got divorced. It doesn't matter. You want a loan? But I'm just out of prison. It doesn't matter. You want a loan? I've got a drug habit. Would you shut up? Just take the money, right? Well, 15 years from that absurdity, they're like, we're not printing money. So in the absence of them printing money, I think we come back to the environment after the Second World War. Prices in North America were rising at 20% in 1948, 17, 15% in 1949. By 1950, 51, they'd come all the way back down again. Why? Because there wasn't a commensurate increase in money supply, whereby where you didn't have to make those difficult choices, where you didn't lose your job, where you didn't have to cut back on going to the theater, going to the restaurant, trading down on your salad or whatever. So that's
do you think
what I say about it.
You think it'll play out like that though, that it will eventually come back down, or do you think this is going to persist?
Well, it ain't coming down in the energy field because of our reckless pursuits in saving the world. If you look at, for Europe, if you look at where the natural gas forward contracts, natural gas is kind of spiky thing. We need more of it in the winter months. If the weather's particularly cold, we discover we don't have enough of it and the price goes higher. During the emergence of the Ukraine crisis in March of this year, the forward points kind of, the winter months went really, really high. But then there was an expectation that there would be a resolution, there would be solutions. What have we discovered? There are no resolutions. Europe has no energy. It only has energy from the autocratic regime of Putin. And the solution, LNG, natural gas pipelines, more and more green, sustainable, it ain't going to be delivered in the next 1 year, 2 years, 3 years, 4 years, 5 years. Natural gas is going to be trading at $600 or $700 or $800 per barrel of crude in Europe for the next 3-4 years. So that's where we create a different set of circumstances, which is if inflation is not, if it is a monetary phenomenon, but if you need a little bit more juice to overcome the limitations in our subdued financial community, and it becomes a psychological factor, well, people getting angry is where you might step next. And so inflation, I think, would be most likely to be revealed first in Europe. And there's a horrible harbinger, I hesitate to say this, but in my paper in the year 2020, I was saying that one thing to fear is political assassination, because that's a great demonstration of the anger percolating and exploding to the surface. And so the assassination of the former Japanese prime minister 6 weeks ago fills me with dread. And I hope it's I hope and I pray it's an isolated event. But when people can't heat their homes, and when it comes out just how lame and culpable and compliant with the Russians a generation of European politicians has been, I do fear. And I'm not someone who fears easily. I'm not a perpetual bear. I believe in the ingenuity of the human race, that we will overcome. Stick it to the man, and some crazy rebel or group of will find an alternative enlightened path, and we will endure. But this period just now is a dark, chaotic period that we have to cross.
Yeah. And folks can probably still find that white paper online. So it brings up the next question, which is, what matters more than the Fed?
You and I, we matter. We matter more than the Fed. And that's the psychological aspect. And you and I have to create, we have to arm ourselves, not with pistols and munitia, but with a better understanding. Again, I keep saying, like, when the gray suits come on, switch off, like, complain. When they keep telling you things are going to be okay, get angry with them. Do not assassinate the experts either. But you and I are way more important. So that was poorly delivered. We need better debates within our society. The problem with ESG is not the origins, it's not the ambition, it's the execution. Since the great technology bust of 1999, 2000, the economics of journalism have collapsed. As a journalist, as a thoughtful, intelligent journalist with so much to offer the world, with your curiosity and your wordplay and your intelligence, you wouldn't choose these days to work for a newspaper. You'd have your Substack, etc. Again, intelligence follows the reward on intellectual capital, and it's not there in newspapers. And so the population at large, we're still consuming, but we're not hearing the whole argument. I think if there are 8 billion people on the planet, 1.3 billion of us are rich. We consume 13 barrels of oil a year, I want to say, and the rest consume like nothing. And we're coming in, we're saying, right, we're going to freeze it at that point, and we're going to freeze it by having no more hydrocarbon exploration. That system doesn't work. We have to be enlightened. You can find lower carbon reserves of oil. You can organize the heavy energy intensity of extracting hydrocarbons from the earth via cleaner, non-carbon based energy sources. There's so much we can do, but to stop everything creates a world where in Europe they're paying $600 per barrel of oil, and it's only going to go higher.
Yeah, there's stats that like 3 billion people on this planet use less energy than that of like an average American refrigerator. So let me ask you this about the ESG movement, because we've been talking about it for a little bit. Is this like, because we're kind of seeing this play out around the world too, like Dutch farmers over fertilizers, because energy is used for the creation of food through fertilizers. We had Sri Lanka play out. I mean, this is just kind of like one of those, that maybe there's good intentions behind it, but this is like one of the negative consequences, or was it like more of like the elites kind of coming from a privileged position of, okay, we want to cut back here, everyone else should do the same? I don't know. Like, what do you make of it? Like, why do you think it's played out the way it has so far?
It's very, it feels very immediate. It feels like we have to do something now. Just look at the summer headlines with the droughts in Europe. France has a lot of nuclear energy, but it can't cool the turbines down because the external temperature of the water is too high. The UK's got a hose pipe ban. The UK, where it rains all the time, it's got drought. So it feels very imminent, and there's a huge sponsorship. It's the investiture is greatest amongst the youngest of us, logically, because they're going to have to grapple and deal with this longer than us. Maybe not me, because I'm getting younger every day, but we'll see. And then actually talking about me, you've got the kind of rich folk. When you're rich, life is blinking wonderful, and you want more and more and more of it, right? And so if that means saving the planet, and that means like, okay, no more hydrocarbon, you're like, great, I love it, I'm in. Extinction Rebellion, which is one of the best funded and most crazily active. These are the kids that chain themselves to block motorways or to stop airports operating or whatever. Very aggressive. They're funded by a hedge fund manager. Who flies around in a private jet. And he gets a free ride. No one takes him down on it. And the kids who are chaining themselves, with the masks on, and we're all in Berkeley and it's 1969 or whatever. You're being absolutely taken for a ride. So I all I can say to you is, again, keep visiting my sites, buy my hats, speak to the crazy people, find people who are willing to tell you the truth, because the system and its investiture has got so much money on the basis that prices just go higher that it ain't going to be offering you solutions. Sadly, it's very depressing. It's very, very depressing. The North. I mean, for all the travails in Europe, I don't know how long we keep these crazy prices, how long we keep that distinct to Europe and prevent it from jumping over the Atlantic and affecting North America. And I say I don't know because, natural gas, the US, for all intents and purposes, has almost an infinite supply of natural gas. But natural gas has to be moved. It's difficult to move.
Very difficult.
If you have pipelines, you've got to have substations for boosting it, so to speak. If you do the LNG, LNG again it's one of these things about favoring the here and now over the smart thing. The amount of investment in ports, the ships in order to contain the pressure, the amount of carbon that's invested in that infrastructure for LNG means that the attraction of natural gas has got 50% less of the carbon emission than burning oil. But when you transform it into LNG, guess what? You just spend billions to make a lot of carbon oil-like product. Again, like, the world is damn crazy. And so you should have pipelines and the technology. Hey, listen, the Russians have got that. The two Nord Stream pipes running in the ocean coming into Germany. So you can do it. We should have them running the length and breadth of the United States. Should be connecting with Europe. But try find a local politician that is not in bed with the hedge fund guys and like the really rich housewives, and everyone's got a social spirit and everyone wants to save the planet. That can come in vacation in St. Barts and have the swimming pool at maximum in August, right? Who don't have to worry about putting $60 in the gas tank, but they worry about investing in a pipeline.
I mean, I bet you see some interesting folks who come through and maybe like human behavior or psychology, just how people behave who come through. Let me ask you this.
I don't. Not really.
Oh, okay. Well, I didn't know if you want to say anything there, but I guess like
I was going to. I tell you what, I was just going to lament on the and I'm wasting our time, but
no, say it, do it.
The people who come here typically my age have enjoyed success in all walks of different life. I mean, you make a lot of money in boring family enterprises just serving, enterprise. But everyone comes to St. Bart's, and first of all, men, all right, I mean, I am no one to speak, but you just cannot dress like Baby Gap, right? And everyone comes and they look 15, they look like my father. And I've said too much.
No. Okay.
I'm the last Jedi. I've come to this volcanic island, and I worked out several years ago, I think, coming through the European sovereign thing, that they'll never reform. Like it's kind of like a waste of time. Better to find a safe, secure, hope and pray you find a safe, secure place away from a maddening world.
Yeah.
That's St. Bart's for me.
A maddening world, and a safe and secure place at that. Let me just ask you this, like, about where, I mean, I don't know, if you were just to talk to like a normal person, or you're not in the hedge fund business anymore, but where would you want to be? I don't know if this is something you even want to answer, but like, where should people put their money to protect themselves? Like, what are the opportunities out there?
Well, the opportunities result from the cultural insanity wars. So you were saying, I was saying to you, I don't think this feels like 1970s inflation, which is to say there isn't the monetary expansion, and therefore people will lose jobs because people will cut back on discretionary spending items. But regardless of that, like oil prices, gas prices, food prices are going to remain high. And you just have to look at the oil and gas quoted sector in the stock market. It seems to have, again, I said to you, I was a trend following contrarian. They're trending higher, and I think we all understand why they're trending higher. The hardest thing, the thing that exercises them most, is misgivings about how China can continue to grow at 5%. I mean, it's failing this year. Its growth is, you never know. I'm procrastinating with Chinese growth because they can always say it's 5%, but they make it up. And again, our media just allows them to make it up, but they make it up. The lie is revealed. If economic growth is where incomes lift, and incomes lift because you're creating wealth. And when you create wealth over time, your stock market goes up. When in China and other parts of the world, where they make GDP growth from building roads, fast rail links, bridges, etc., and where the cost of those projects will never be repaid by the utility of moving the citizens faster, if you will, and over these expanses, that the economic advantage accruing to those individuals from using that infrastructure will never repay the cost of making the infrastructure, then you're destroying wealth. So China, over the last 15, 20, 25 years, its GDP has been parabolic and the stock market has been flat. Stock market never lies.
That's a good
but
point.
You asked me a question: what should people do? Life is one of paradox. Like at 30 seconds to midnight, the Germans have kind of decided that maybe they shouldn't close down the final nuclear power plant. Uranium, I think we're entering into a world where if you don't want $600 per barrel of oil heating your house in North America, we might have to see a few more nuclear power stations. We certainly have to see a lot more in Europe. The lead time may be long, but when there is an intention, the price will reflect that. So uranium, oil and gas. And then it's not really an advert for gold. Gold is just, let me, I am not a Peter Schiff. God forbid.
Yeah.
God forbid. God forbid. It's, I am the anti-Schiff. people have to understand that people were desperate to understand this war. They've been confined for the best part of 2 years. They're losing their job. Prices are high, and they come looking for advice, and they get middle-aged gray people, right? That's a disaster. Anyway, forgive me. So I made a lot of money from gold. I am not a gold bug. Gold is blinking preposterous. This is a stupid thing. Really, really stupid. It's stupid that you would buy gold.
Why? Tell me.
Because what economic purpose does it serve? To go to all of this expense, also the little pollution. You've got to sift so much ground and rock to find this, right? And what do you do with it? It's not like you put it into some technology which saves the planet or makes us more productive. None of that. And even today, you could argue you don't need it anymore with Bitcoin. Maybe. Don't need as much of it because there are alternatives.
Wait, okay. You just mentioned Bitcoin. Is Bitcoin an alternative to gold? How do you view Bitcoin? I'm sure you get asked this bit.
The value of Bitcoin is trying to determine how much of the demand in the future which resides for wealthy people to seek assets where you can't expand the supply, and therefore they're deemed to be inflation hedges. And up until Bitcoin, which is, let's call it 10 years ago, kind of gold had it. Gold and silver, but silver has more of an industrial cyclical application. So kind of gold. And gold, heavens, how much gold? I want to say $2,000 was a $9 or $10 trillion market capitalization. And so the whole point of Bitcoin was like, hey, what if actually people think, I don't need gold, I can do it with Bitcoin? And what if 50% of that market became invested in Bitcoin and not gold? Well, then Bitcoin should be a $5 trillion market. And then you take $5 trillion and you divide it by, they will not have more than 21 million. It's like a share count. They won't have any more than 21 million Bitcoins. You divide 5 trillion by 21 million and you get an absurd price level for Bitcoin. I don't dismiss that argument. I don't dismiss that argument. And indeed, further in terms of trying to end on positive light, I said to you, a depression since 2008. In 200 years, we've had 4. This is the 4th. We had one in 1830, the Les Miserables. That musical?
Yeah.
I'm not in music. But it was a musical
French
based
theme
on
again.
Yeah, exactly. And because there was it was the first economic depression whereby you were losing your job, you were hungry, you were angry, things weren't, like Dagny, life's not good. I don't know what it is. There's a corruption in life. And back in 1830, normally it would be because the crazy king has just invaded Russia or something crazy like that, But there was none of that. And instead, the travails and the poverty you felt was owing to an economic contraction, that banks were no longer expanding credit. And that was the first time ordinary people felt it. That was 1830 to 1855. There wasn't enough money in the system. That ended with the discovery of Californian gold, which was a massive increase, giving the banks leeway to lend more. The same thing happened coming out of the American Civil War. It's called the Golden Depression, because we did have economic growth, 1870, 1890s, but there was a great desire to rebuild after the continent-wide war and damage. But the banks were constrained. You could only lend so much based on how much, again, this damn stupid piece of metal that you had in your vaults. And after a couple of years, they'd used it all and like, sorry, I can't give you any more loans. And that's the Wizard of Oz depression. The yellow brick road is the gold standard.
Yeah.
And unfortunately, Dorothy wears ruby slippers because it looks good, the red
In the
against the yellow
movie.
in the movie, but in the book, of course,
Yeah,
it's silver slippers.
that's
It's
right.
like, hey, bring in bimetallism, expand the money supply, help the poor guy.
That's interesting. I actually never
And you
made that connection, but you're right. She did wear silver slippers in the book.
Yeah,
Yeah.
and then the line is the politicians because it's heavens, what's his name? The politician the populist who stood two times for the common man, Henry Golding. Oh, how does my mind's just
Wait a
um,
second. We have to look this up.
William Jennings.
Oh, William Jennings
William
Bryan. There you go.
Stop crucifying the common man on a crucifix of gold. Arrête, arrête, arrête. That's French for stop. He lost two times. He was genius and he lost two times. He is the cowardly lion. He can roar, but the money, and again today with ESG and all this nonsense, the money controls the narrative. And Trump and the like, they're just powerless. Biden, their lines where there's no bite, it's just preposterous roar. Okay, that depression was terminated with a technological revolution, which we call is a chemical leaching, which allowed you to access and obtain more gold out of South Africa. So again, we created money. And then the third was the Great Depression. And I would say to you that it wasn't the Second World War. It wasn't the Bretton Woods monetary system. It was the creation of taking the government out of banking and allowing banks to operate amongst themselves. As a revolution in banking. And that created the immense prosperity of the last 50 years.
Wow.
And so we will come out of this fourth episode probably with a revolution in money. And the revolution in money, it would seem at this point, would have something to do with the blockchain and just making it easier and taking a lot of cost out to start expanding credit again. Maybe this time around, having taken the government out of credit, what if we can take the banks out of credit as well? That might be the narrative for the next 50 years.
That's an interesting idea. When you say blockchain, could that involve Bitcoin? Do you see a place for Bitcoin?
Yeah. But Bitcoin and the valuation of Bitcoin will always be a function of a wealth institution, be it a family or a pension fund, etc. How much of their assets they wish to allocate between commercial property, gold, U.S. treasuries, those kind of things which are kind of U.S. treasuries might be a leap. Index-linked U.S. treasuries, tips.
Mm-hmm.
Is it because you put all of that in, and that you're talking heavens? What are you talking? 50-60 trillion dollars market, more than that. And you say, well, maybe Bitcoin is 2 or 3% of that, or maybe it's 5, maybe it's 10%, and that will give you some frame of reference for where Bitcoin should trade. But it's the blockchain, the paperwork that I have to endure, taking out loans to build houses. I mean, that and the lack of trust, if you will, between the two counterparties. If you could bridge the lack of trust and make the counterparties just more willing to trust each other and therefore more willing to exchange credit, that would be how you could expand the money supply and get money to the entrepreneurs, get money to the future Steve Jobs who are, in their garages today being crazy, but you have this chance to kind of shake up the future.
Well, Hugh, this has been an incredible conversation, and I've learned so much from you. And I want folks to just hear from you a bit more about what you're up to. You have a podcast, Substack. Let the folks know what you're doing, where they can find you and learn some more. Well,
let me put the hat on.
Yeah, put the hat on.
Hugh Hendry. I've got a Substack with the name. I'm on Twitter. I got the generosity of 60,000 fellow souls, would you believe? The tribe of acid capitalism. Hendry _ Hugh. I contribute there. I do a weekly podcast. It's called the Acid Capitalist Show. You can find that on the Apple platform and all the others. But Apple for me is the S&P. Spotify is Nasdaq. We're on both. And we also have that on YouTube. And then if you want to see a bit of the beautiful color that surrounds me, Hugh Hendry Official is the Instagram. I don't wear bikinis, but
I love that. Is there a story behind the Acid Capitalist, the name for your podcast?
Yeah. The many stories. The world's so crazy that like the idea of being that you've got to trip out to you got to trip you need higher revelations. A wise person said to me, so I give off this irreverent attitude, and a wise person said to me, listen to the audience. The audience will always, they will promote onto you what they're either missing or what they want from you. They're telling entertainers, and so my thing is, I've always done it differently. I have this preposterous experience of being shaman-like in just getting glimpses of what can happen. I form contentious narratives, and so yeah, they kind of we all need a bit of enlightenment, and people push me in that direction of the acid form of capitalism. Back at the height of the 60s counter-cultural movement, there was a big thing for the opposite, acid Marxism, and like we don't want that. We need a more fun, more playful, adventurous spirit of capitalism to take us forward and not to go backwards.
I like that. And you've given us a lot to think about. Hugh Hendry, thank you so much for joining us.
Thank you.